Why are global markets so nervous about the U.S. presidential election? Joining me now from Chicago to talk about that is Jonathan Brodsky. He is the principal and founder of Cedar Street Asset Management. Jonathan, thanks for joining us.
Thank you for having me.
So, Jonathan, a Trump victory and presidency has been equated with increased uncertainty and volatility. If he wins Tuesday night, how do you expect the U.S. markets to react come Wednesday morning?
Well, I think you mentioned in your opening a little bit about some of the gyrations that we saw this week. The expectations of Hillary Clinton win shifted pretty dramatically over the last few days, and we've seen the VIX index dramatically increase. In fact, it's up approximately 70% over the last few days, and that's indicative of some fears that are entering the market. And I think that's somewhat just the beginning. I think the markets are still pricing in probably around a 65% probability of Hillary Clinton winning currently. So if there is a Trump victory, you would see increased volatility.
Increased volatility, does that translate to a major sell-off across the board here in the U.S. and globally in equities?
Well, I think a way to look at that would be is over the last few days, the Trump possibility of becoming president has moved upwards, quite a bit. And we saw the S&P 500 come down around 2%. Trying to determine where the markets would go if, in fact, he were to win is very difficult. I've seen analysis say, for example, the Brookings Institute is saying that there's a possibility of a double-digit decline. It's very difficult to determine how much will be priced in by that point, but certainly the markets are indicating increased volatility and a likely sell-off.
Well, the prevailing sentiment is that a Trump victory would make international investors less confident about the direction of the American economic policy. So do you see that signaling a dollar weakening if he does win?
I think before I answer that question, I go into the fact that this has been an incredibly daunting year of political risk. So it's not a normal year. If you just look back over the last 12 months, we've had an impeachment in Brazil, we've had Brexit, we've had a recent vote in Colombia that was unexpected. The Thai king just died. It happens to be a very unique year with a lot of political risk. So I think you have a lot of wariness, especially emanating from Brexit. And I do think that if there's the unexpected Trump victory, you would see capital leave the U.S., and the result would be a declining U.S. dollar.
All right. Well, other currencies certainly likely to be impacted. Trump has said he's going to tear up NAFTA. He's threatened tariffs. So what would this mean for emerging market currencies? The Mexican peso already shown sensitivity to poll ratings. Where do you see the peso heading if Trump wins?
Well, certainly, if there is a Trump victory, the two currencies that would be most in the crossfires of that would be the peso and the Canadian dollar. And I think this issue in terms of where the treaties would go and NAFTA-related issues are really at the forefront of people's minds. You're seeing a lot of volatility around the peso, and it comes back to this issue of uncertainty. And we've taken a lot of look, quite a long look at treaties and what the impact would be from the executive branch. That is a foreign affairs related issue. So there can be a lot of power coming from the executive branch. But that being said, NAFTA was passed through a congressional process, and we would think that there would be a lot of potential for that process to be reinvoked if, in fact, there were this issue of exiting NAFTA. So, it just creates a lot of uncertainty, and the market does not really know how to handicap it.
Well, Jonathan, whilst the favoritism towards Clinton seems to be because there is supposedly more certainty, she's made some very strong anti-Wall Street remarks. She's certainly been advocating against biotech, pharma, and healthcare stocks. They've been falling on concern that she'll win the election. She's made it clear that she wants to increase regulation, and she's taken a public stance against pharma companies raising drug prices. She's also said she wants to increase taxes on hedge funds and increase regulation. So why are the markets favoring her so much? Is it really a question of what we think we know as opposed to what we don't know?
Yeah, I think that's the way it's viewed. I think there's a lot of uncertainty around some of the things that Donald Trump has said, some of his policies, the impact on protectionism, the impact on geopolitical risk, for that matter. So I think that the market is viewing some of the less market-friendly policies of Hillary Clinton kind of as a side note to the broader issues associated with what will Donald Trump bring to the table in terms of what he said versus what he actually does.
All right, we'll see what awaits on Tuesday, November 8th. Thank you so much, Jonathan Brodsky, principal and founder of Cedar Street Asset Management.